afternoon. It's almost 3 o'clock, and welcome to this fourth day of this webinar related how to invest in the film industry with confidence, and of course, how to obtain a more than reasonable return on investment. Before to start, I want to talk about some service, that I would like to announce that we are open to evaluate distribution in Canada for now only, because we are busy in the operation of 3 films. But for other films, we are available for distribution in Canada for limited release and selected film, and then it depends. It depends the type of film, the movie. We can implement a certain level type of strategy to distribute a film. Could be full scale or limited release in limited theaters, or all Canada, or even though by a certain region, or region by region. So many options are available in the main chains that are Cineplex, how called that one? Cineplex, Rambo. So this is the two major cinemas chain. So yesterday we spoke about. This is the 4th day, so 3 days. We already spoke about first of all, like summarizing the gaps available. Gaps usually happen that show in the movie, complete process from development to distribution. So, and then the fact also that we have to optimize the all processes in mechanisms in each single mechanism, and is their component that must be efficient, optimized in the way toward the final goal. That in our case, in my case, is a niche market of independent film industry. So we spoke about that. So we summarized these mechanisms and how to implement certain tactics, and also typical strategy in order to implement efficiency. So also because I mentioned many times that the CMMI, the capability maturity model integration, that I think is very important to follow this as a model, this kind of way to manage the entire mechanism, the whole mechanism, from development, production, and distribution, sales. So then after we will elaborate each single mechanism from development, production, and distribution, and certain fact of how supposed to organize the entire process. And yesterday also we focus, organizational focus. This is important. Organizational focus is a very important, critical factor of the entire process. And then also we talk about risks, how to manage risks, and then the model, the type of involvement from investors to secure investors, and to may create a safe environment for who puts money on the project, on the film project, or the films project. In our case, I mentioned many times operation of 3 films, that are 3 films to produce and already develop, because we have a script already, everything organized, we have production already, then there ready to start a distribution in-house with through 1G Media. So now I would talk about related the situation of first of all, we understand that we need this implementation to have a good capital gain in a completely safe environment. So to remind you, I am Marco Taloni. I run the agency Marco Taloni Investment exclusively for the film industry. And of course, I do also I do sales, movie sales, and more than a decade I am in the film industry, and some other decades in business development internationally. So this webinar will continue for 2 more days. Tomorrow is Friday, a Saturday still at 3 p.m. and Saturday at 11 a.m. Eastern time. So do your calculation for Pacific time, Central Mountain time. So the Eastern, I don't have to tell you, Eastern time is New York City time. So every day we will discuss the stages, the issue to be identified in such a type of investment, disclose the strategy, secrets to get on the right path, and ensure that our investment will be as expected. We spoke for 2 days already, as I said. This is 4 days, and this webinar every day is recorded. So I think the first day already put on social media. I think in Facebook of Operation 3 Films account, Operation 3 Films Facebook account is already on the recording of the first day. But then also will be a page, an internet page, that all the days, all 6 days will be in that page, in the internet page. So you can call me, email me to mtaloni at 1G1 as a digit, gjv.net, or exec at Mark Taloni Investment, marktaloniinvest.net. So we spoke about risks, quality, film industry as a source of income, how, reality of the film industry, business production, organization of the business, and gaps, as I said earlier, making the business bound to failure, distribution, sales, how it's fundamental how it's fundamental to convert everything in revenue. So as we said that we speak about distribution strategies, organization, and numbers, and also some situation in the film industry that would happen in general. It would generate outputs, let's say, okay, some underperformed, others as a failure. Before that, I want to go over the fact, that that is a question that I anticipated earlier in this webinar related to Hollywood studios, how we can be competitive as a film of independent production. Well, first of all, how? You think maybe is it too much ambitious? So our independent production is too much ambitious because we are talking about Hollywood studios. But I mentioned to be like Hollywood studios. So how can I get a film to a cinema screen and have adequate revenue? So that is matter of fact related to the distribution operation strategies, and then coming up with numbers. First of all, I already said that we do not compete. We do not compete with Hollywood studios. We are not. Because they bring their blockbuster movies to screens in their way. And us, we bring our movies in our way. So what does it mean? So the fact is Hollywood studio films, of course, are expensive, very expensive to produce, because the structure of the Hollywood studio is huge, and there is a lot of costs behind to maintain, and then you have to keep going. They have to hold keep going to maintain that, let's call ambardam. I like this word, ambardam, ambardam. So that monster of structure, they must come out with big money. And they blast such movies all around the world, basically at the same time also, because that's how they are organized. So this fact doesn't mean that our films as independent production is a garbage and nobody care. It's not. A good enough film product is needed. Remember that is needed by cinemas because they have screens to fill every week, and Hollywood doesn't have the power to produce a quantity of film product to fill such a demand every week. Necessarily, cinemas have to go over independent production. And that is fortunate for all independent production entities. So, but what do cinemas need? So cinemas need something, perspiring money, revenue. So they're acquisition manager. They choose the films to put on screens. So to have our films to go cinema must exactly perspire revenue. So how? So later we will elaborate on this point, but I can anticipate that they do market research to have a criteria about they have criteria about local audience preferences, data analysis, and also they look into the popularity level of of the film, the power of all the power of audience gathering, and also they go festivals, they have a list of film production, a data of it. Then they apply their criteria to evaluate what distributors offer. Then in general, we must have a quality film product that can fit with the targeted audience. We said that earlier. That's fundamental. We are also offering, it's important, offering to cinemas owners a powerful and substantial campaign of local promo marketing. So that's fundamental. We must create a solution that fits the cinema owner's expectation in terms of revenue. So that's what all cinema they want: money, of course. Of course, we too, as investors and entrepreneur. But then we don't need to be competitive against Hollywood studios. We need an adequate film product. We attached an option that assures a certain minimum number of box office tickets sold in a limited time. Hollywood studios are competitive just because they have priority of screening, because the cinemas owners know that the level of popularity will be very high for that film, and they know tickets will be sold as expected, more or less. Just as simple as that. The distributor has this big responsibility to make the movie work properly, and there is a lot of money involved to do so. Then the producer and investors, if they do not have the distribution agreement or they don't have a distribution in-house, they have to go out and seek for distribution deal. They go to festival, film markets, and speak with distributors with a scope of seeing their film sold to have a recoup, money spent back in the pocket, and eventually some revenue. Phantomatic. Remember this word. Minimum guaranteed. So what does it mean? So we heard that. I can say for a long time, I did, before, that there was a substantial money before provided by the distributor in advance, and they use to guarantee a minimum revenue for the product, for the film owners. About these days, still might happen, but how many independent film will be capable of getting that advance and minimum guaranteed? Who does get that? So I'll tell you what. If you have a film that has already very strong popularity, actors who some of those are A stars, means worldwide well-known performers, and a compelling story with a film that is a great motion picture and also a buzz among media, such interviews, etc., and some important festival where there is some prize taken. So then I am pretty sure that there will be a demand from distributor to secure the rights of distribution of such a film product. And then producers, investors, eventually get a minimum guarantee. But still, we don't know yet how much will be the final revenue, even though this scenario. So what I know is that the distributor wants to maximize the box office because the distributor makes his money from the shares of the box office with a deal with the cinemas. In general, is a 50% after tax deduction of the box office. Sorry, one second. Give me a second. Sorry, I tried to cook. I hope so. I hope it's working. So anyway, distributor will spend a lot of money on a component called PEA. It means print and advertising. A print means also the copy of a film that has to go to screens. It's called DCP, Digital Cinema Package, that is generated from specific labs. That is a digital unit, usually as an international standard format, which is compatible with the cinema's projector around the world. It contains all necessary digital data for the film, including sound, eventual subtitle, and other necessary data for the projection of the film, of course, the file of the film itself. So that's called PEA. I mean, the print master, DCP. The distributor will go through the following component of the distribution. First, DCPs. It depends on how many screens simultaneously will be projected a film. Let's see, in the US, not all theater at once. Let's see, I mean, that I think more than 5,000 theaters, all the United States. But let's say 2,000 screens. We need 2,000 DCP at once and delivering them to cinemas chain. That thing has a cost. So the price depends on many technical factors, sound type, resolution, if 2K or 4K, timing, eventual encryption, frame rate, subtitle, other facts. Let's see, average cost for the master, I will in US dollar will be for DCP master, I think around $800 just for the master. Then each copy will be $200 basically. So the DCP is a box with like a like let's see, let's call it cassette, like a big item, digital item, and then 2000 DCP is $400,000. Can you imagine? $400,000 only for the copy because I have to send it too. Then advertising. It depends where you are going, how long and what kind of advertising. Of course, the more you do, the more you will have results. That's up to the strategy of the distributor will apply. Do I have any suggestion? Well, to optimize the advertising strategy, it depends on facts of the movie, starting from its popularity level at the moment, related to the size of the release, and it means the size of the regions, and also by how many territories the distributor will go, decided together with the cinema or cinemas owners, which has planned to release the film to screens. So later we'll go over more these details, but those are the parameters that a distributor will evaluate for the scope of achieving good box office revenue. But keep in mind that the rights of the distributor allow him to do all what he wants about how to apply advertising and release strategies. So what does it mean? It means that before producing shares of the film revenue, he will deduct all the expenses incurred for the film releases. And I cannot tell you how many lines of costs will be in such a report. Again comes the word phantomatic. Phantomatic, remember this word phantomatic revenue, will be generated in this pattern of distribution for producers and investors. Ultimately, the producer and or the investor will see the money left over from this process. You can bet that the distributor deducted already the minimal fee for such distribution. For the entire process of distribution, the fee, only the fee, they generated 25% of the box office, usually after box office revenue, after tax deduction. So the tax will be deducted, and then the balance will be around 25% go to the distributor. So we have box office income, tax deduction that could be averaged 13% to deduct from the total income calculated on the basic amount of the tickets. Then 50%, this is a general, very general, in general, let's go in general, 50% of the box office share, it depends because it could be different story for example, blockbuster film. So the 50% goes to the cinemas, the owner of the cinemas. Then 25% of the box office goes to the distributor. Then from the leftover, it must be deducted all the cost of PEA and other related fees, such as the cost of task force for advertising material to add it up on advertising costs, called overhead. So how much will be the final PEA? We cannot know clearly until we don't see the check. That's what happened with third-party distribution corporations. In this case, the net revenue for the film, for the film investor producer, how much will be? So that's what we want to know. An answer? You want an answer? My answer is, again, phantomatic. It's very hard to know that. Recoup is the most important thing. But then I believe that in general, return on investment cannot come from the beginning of releases in this way. But we have to rely on further territories and eventually go into digital platform. But still, the distributor will have expenses and fees. So this is a scenario for a film in demand, but applies also for other films which don't have the same appeal as the one in demand. And obtaining a minimum guarantee, I can say, for these more common films, it's almost impossible. And even the financial advances will be impossible these days. So this is basically the typical scenario of a film distribution for an independent film. So it seems an arduous path with no real guarantee, no secure return, no clue what would happen. Based on this scenario, it seems that investing in films is nonsense, and let's call it extremely risky. Of course, looking at the situation, how it appears, is so on, like it seems really on the dark side, in the shadow, and in a cloudy situation. And also be careful. Don't believe traps and promises from salespeople, from unscrupulous filmmakers. Maybe they find a way to convince investors, to convince you, but you have just to be sure what will happen. It doesn't mean that it's very bad. It's just a little phantomatic, but still could be good. But if you like to risk and hope to get a reasonable return, that might happen because it depends on the sales manager until he take responsibility to sell the film around. You can go for it. You can make money through the years, but the salespeople focus where they see immediate money. Remember that. I have been a salesperson for a long time. I know the feeling. You sell what it sells easier. Remember that. I was one of them. So, again, it could be worth it through the time. If the film sales will perform well by the salesperson at the sales corporation. What I believe, as I already mentioned in this webinar, is the quality, efficiency, organization, strategy, distribution in-house. So my concept is to measure in advance the potential financial outcome from a film product, but not only from the artistic point of view, but from the organizational level that is possible to implement in a realistic scenario, including all the components of the distribution process, all included. Given, let's see, given the film product with an artistic value enough for my purpose, and then with the mechanism to be evaluated and implemented for the production to do it in the way how I explained during this webinar, we need an organizational focus for the distribution process in-house. As I said, I believe that the most reliable and measurable process to make our film industry, specifically a small independent film production and distribution, is to be like a Hollywood studio in a tiny, tiny structure, but with a very similar concept. Then again, I will go through our distribution model related to organization, strategies, and numbers. That's what we want, right? We have a distribution corporation in-house ourselves. It means within our organization. So, for example, let's see an example. Operation, I already spoke with this, my operation right now. Operation 3 films, that's my operation. There are 3 films projects which are selected and approved, and with 3 film producers attached, selected, approved as well, with parameters related to the goal of the operation and relate to the producer of the operation. The producer are compatible with these elements of the entire operation. We are agreement already placed. We are organized already, ready to go. The production of the 3 films will be simultaneously, and the production plan will be approved by the committee of the operation and supervised by operation manager on the sets where the film will be produced. Different sets, of course, basically, we have Operation 3 films. There are 2 in US and 1 in Canada. So meanwhile, the mechanisms are working on the realization of the film products, we must comply with the expectation of what has been already discussed and approved. There is already the distribution corporation on the move right away and in agreement with all groups between the three producer, the project management entity, that would be me in this case, so for Operation 3 Films, the distribution corporation, and the investors. Here, the distribution corporation is not an external entity that does whatever wants, and after we'll see what's happening. No, it's not in that way. So in this way would be a gap, as I explained in the past days. So a gap that will not allow to achieve. We are not allow us, organization, to achieve what expected. Instead, the distribution corporation works for the operation, completing a detailed plan of a PA, so meaning print advertising, and with applied strategy that we know already, and we have approved in advance. We know that what will happen, and then we know also the numbers, because the distribution corporation has already elaborated a plan in detail, and every implemented process will be around the number expected. It has been generated distribution plan made to measure the structure of the entire organization and made to measure the expectation of the investors. But also, the investor will become owners of the film until they want, or until they sell the shares. But the distribution corporation maintains the plan for the years to come. So, I mean, the year is a binding agreement. The corporation will maintain the plan for the years to come. So, that, what does it mean? It means that there is an assurance to obtain a large return on investment, keeping going even through the years. I can anticipate that the strategy, the organization, and the number are generated for the first 2 years, but revenue can be generated for another 15 years at least, because the corporation is a sort of perpetual agreement for selling the three films. So, and here you go. So, as I said, another 50 years, because the corporation is in is a binding agreement, perpetual agreement for selling the three films. Be aware that the corporation where the investor want the film trade, it will be generated in that moment. So the corporation is not something that the investor buy it. Doesn't exist. The corporation owners of the film will be generated just for owning the film. So meanwhile the film are produced, the corporation will be, because we have an agreement with the authors. Everything is written already under agreement. The authors, the producers will produce. There is no choice. They can just change. They will produce the movie because that's in agreement. Because if they don't produce by agreement, if they do not, for example, no, I'm tired, I don't want to produce anymore. Who care? Kick it off. Kick it out. We have another producer. So everything is under control of our organization. But of course, the producers are interested to complete the movie because they want money, because that's what get paid. They get paid by agreement through the production of the film. So the film produced, and then meanwhile producing, become part of the brand new corporation that the investors will own the shares. So, and then also for tax purposes, for many other reasons, is important. It's good to have that. Easy to do it, especially with that. Is the idea is to make it in Canada, in controlling Canada, easy to by strong law, and at the same time easy to administer. So I say, with such a corporation will be generated in that moment. It's always a new corporation for each operation in general. It might be different way, it depends. But in general, the corporation created brand new will be at the moment of the green light of the operation, that for the entire process. When the green light comes, as I say, created this corporation, brand new corporation, owner of the films. And that is for the sake of control of the funds from the investors, and also for tax purposes, as I said. But anyway, it does not mean that the corporation will only sell our films. But basically, yes, because we can produce 3 films a year, for example, keep pace to distribute them with the same concept. So with another corporation, or a new operation. So each operation has different corporation. That's the best thing. The best way is not expensive. Actually, helps for the tax purpose. Who can handle all these corporation? We do. Is it a problem to do that? It's not. It's not a problem. And then again, that is what Hollywood studios do. And that's what we do. If you see it, there is a huge difference to make a film and then go out a sick distributor that is willing to get your film and do something to make some buck. So there's a kind of big difference. And they say, oh, okay, well, some buck, bye, see you later. So, oh, will be pretty different. having a distribution corporation in-house that was for the operation fully from the beginning. So as I said, the distribution corporation is not the same of the films. They are two different things. Distribution corporation, a corporation of distribution, that's one entity. And then there will be the corporation that owns the film. That's ownership of the films. So I think there is a large or even huge difference. Don't you see it? The machine is complete. It starts immediately at full gear. So time is money, organization and efficiency is money as well. Then if the machine is complete, it runs a full gear, what does it mean in terms of money? So do you know the answer, right? More money. That's the fact. That's the answer, and even much more. I mean, it's not something very. It's very intuitive, this thing. Very intuitive. If you have efficiency, organizational focus, timing, and plan, and everything well guided toward the goal, of course, there is much more money. Instead, if you don't know what's gonna happen to your film, you don't know exactly. Okay, you have distributed. Okay, good, but then the investor, they will not know how much money they're gonna get. They will not know. Because they say, because remember, the producers, all cast, all authors, writers, director, they are under agreement, salary. That's the money that we needed to produce the film. So they get paid for it. They don't care at the end. Who care is the organization management, the investors representative. For example, in this case, is my responsibility. And then responsibility, the people, the distribution that has, of course, the distribution has interest, a big interest, because more money he makes and more money he gonna have, right? So that's my model. Our model of carrying on the Operation 3 films. Distribution in-house, well organized, with a clear concept of goal to obtain, how and the procedure to implement to obtain it. So that's how to define. I was checking if it is on. Film industry as a source of income. Numbers. Where are they? I know. Yes, you want to know. You want to see clearly how such numbers would be obtained. In my case, Operation 3 Film, we have the first film is, as I already mentioned that. Sorry, just get some. So the first film is a horror art house. The second is a drama music romance. And the third is a psychological romance violence. We evaluated the film's project, and all of the trees are of international value. It can be accepted by viewers of the entire world. Of course, in English language, but our distributor in-house will carry on subtitles in Italian language and Thai language. No, Italian subtitle Italian language. Subtitle in Italian language actually is dubbing in Italian. We go dubbing in Italian language and subtitle in Thai language. Subtitle in Thai language because in Thailand they like to have English language as subtitle in Thai because they like it. It's very common, these things, But in case we'll see that also we have to talk with the cinema owners. In this case is. Is I forgot that. I have the name, of course. And then so because our distributor will directly work in Canada because they 1GG Media works in Canada, the US, the UK, Ireland, Italy, and Thailand, because as bases in such territories. This is directly distribution. The distribution corporation we operate directly in these territories for theatrical release. Then the rest of the world, still directly, but in cooperation with local agents in each territory of the world. Then the same corporation will deal with digital platforms, our corporation, with broadcasters, cables, and eventual DVD, then airlines. Then it will keep handling reruns through platform through the years. I think it's a huge opportunity, a lot of chances. Sorry about it, because they go is around. There is this respiratory like flu. I get weeks ago, but this stuff still coming back all the time. So sorry about that. So and I think this is a huge opportunity, a lot of chances to have a pretty good level of revenue. It's a passive income system for investors, thinking that after the financial recoup and the first return on investment at the beginning, the net revenue will keep going to come for years to come, year after year, until the full exhaustion of venues. That's the scope. Because the fact, how is that? Look, you have to think. We don't need a blast. We need to have a product, sell it, keep going to sell it, because we are not going worldwide advertising, like blasting. We do locally. That's what we work in small little films, small budget. I'm talking about 1 million, 2 million, 3 million, small budget. So we work locally, region by region. We do advertising by region. We can do to these days. We focus in certain areas, focus to get the box office full, and then go the next region. In our world, they can take years. So what? We don't care, because nobody know. We are not going to the international popularity. We do local popularity. That's what we want, because people, when they go to the cinema, go locally. They don't go an airplane, they go another country, right? So they go where they live. So that's what we are. Our strategy. We do locally in small scale. So doing this way, keep going, is basically an almost unlimited source of income. Why is that? Because as an eternal product, we keep going to sell it, because we have distribution and sales inside a group. But also, that doesn't imply that it's finished, concluded here, because meanwhile, the distribution organization is to maintaining pace for selling the films. We can just generate Operation 3 films number 2 the next year, and so on. Films are needed, and when there is organization and an adequate structure, it becomes an automatic work. So now we can conclude the day, but I want to summarize the fact that we must have a complete machine, well organized, with strategy, clear structure, clear goal, clear path to achieve such a goal, and with all mechanisms and their component running efficiently, with an adequate processing and smooth cooperation, almost zero risks, and with a reasonable and plausible ultimate achievement set. Only in this way we can run a proper independent film production and investing operation, and consider that as a so in this way, in this kind of scenario, we can consider that as a sure source of a satisfactory income. So see you tomorrow, also with numbers and strategies. I want, but just as usual every day, I would like to to point out an option. Point out. Okay, here we saw the business plan. So we saw already the business plan, and so these. So we talk outside a certain point. See the number. Let's talk about number. So I we go over again. So here, for example, the operation number 3 films is made by a region. By a region. So the calculation is our first is divided Canada, US, and the UK and Ireland, Italy, Thailand in regions. We don't do, for example, cinemas we have here. Let's in Canada we have 494 cinema around, so we get only 228 at the end. We aim in limited release, so meaning 1 week, 1 week 1 week, meaning 5 days, and 4 weekends. So meaning 4 days weekend. The first weekend, 1 week or 5 days, if last weekend. So very short time, because we focus in the region. We focus in the region. And we get limited cinemas. For example, could be 100 cinemas for East only 100 cinemas, and then we do another 100. So total 228 cinema for all Canada, divided in 3 times or 2 times. It depends. 2 times. So 2 times meaning, for example, first week you have we have 3 films, right? 3 films. So the first week we can do 2 films at the same time, or maybe 1 week, the first week 1 film, the second week another film, a third week. So and then each film will have extension option in case of demand. So we base this calculation. We base this calculation on only 200%. I mean 12%. 12% average filling, 25% during the week. So 12%, meaning average 100 people, only 12. I mean, for example, we do four shows a day, because we are 90 minutes films. We can do 4 shows a day. Average all day 12%. So meaning during the day maybe nobody. So the first show, nobody there. Now one person. I know. I went to see. We went to statistically to check films, every kind of film, even unknown. 1 person, 2 person, and then we have a second show, maybe 5 person, and then the third. I mean, I'm talking about a theater, 250 seats, but with this calculation, 12%, not 256, calculated in 170 seats. Only the seats usually they are filled from people, because the one in the front, nobody go seats in there. We just be very reasonable, calculating only the seats to use. That's 170. So 170 over the theater, 250, 170 seats, 12%, and then 25% during the weekends. So weekend, we are talking about Saturday and Sunday, 2 days, Saturday, Sunday. So four shows a day. Saturday, the one maybe it's not full, ever full. Could be maybe 25%. Could be like could be 50% in the evening, half 50% in the evening, or 40% in the evening, 25%, 20%, 15% during the earlier. But usually we can 25% in 1 week, a limited release, because we do advertising for 2 months before prior the shows, to bring that kind of level of people. So if they don't go, because that's an average, they will go. If they don't go less, it's calculated already, but that's already the average. Could be more. instead. Anyway, so so basically we calculated 3 films for all these territories comes a gross after tax, so 150 million before tax, and then taking out the tax, 102 millions for Canada, US, London, Wales, Scotia, North Ireland, Italy, and Thailand. So this is 2 years round, 2 years round, but this is a gross box office. So, but then will be cost, like almost between overhead and advertising, we calculate around 40 millions of dollars of costs. So then at the end, that's our ROI for investors. So the 3 films budget is totally 6 million, and then ROI 180 because the distribution participate in the there you go. Ecco qua. So this is my last sip of my drink. Remove stop share, and then I thank you for the fourth day of this webinar. This webinar will be recorded. It's recorded and then will be online on social media and in the page of the webinar itself. So who can ask? Who has email with me? We will have the links related to it. So see you tomorrow, the day number 5 of this webinar. Thank you.